All right, so let's see. All right, good morning, everybody. Today is Tuesday, May 16th, and as usual, we'll be going over analysis for US 30, gold, and EU. So this morning we did have some news, and for you guys who have access to my charts, I had sent you access to my charts at about 15 minutes before news, and you could see that US 30 was ideally in a demand zone, in a heavy demand zone within demand zones. Gold, the same thing. So this was pre-news right here. So personally, what I did, I just came back to my charts, looked at, we are in just bullish zones, we're in demand zones within demand zones. So literally I just jumped into a buy, for gold and US 30. And you guys can see that, no, I think it was only for gold. You guys can see that, because also the gold, if you look at gold, it's sort of a double bottom, right? So you have, even on the hourly, this lower low, this lower low also. So I expected that retracement from here. And I just jumped into a buy. Now, if this was NFP or CPI, I probably wouldn't have jumped into that buy immediately before news. But for me, the news that I'm literally concerned about heavily is NFP, CPI, and FOMC. Other than that, all these other red folder news, I'm really not concerned. I don't expect them to break such a heavy demand zone immediately. So for this particular trade, I just waited, and then I entered right here. I was in a little bit of drawdown when news happened, but then price went all the way back up. EU, I know Levy was in a sell for EU. So EU, the only thing that was so I saw buys for US 30 and gold. On EU, the reason I didn't want to buy EU was because we had a death cross that was forming, and EU was ideally looking to complete structure also in the 5-minute as well. You can see this structure right here. So you could see that EU had to complete this structure to the bottom. So that's why, as opposed to US 30 and gold, I didn't see a potential buy on EU. So that's why I didn't take it. But the gold buy to me was a no-brainer. I took it, and also because of news, instead of using 50 pips stop loss, 50 pips TP, I went for 100 pips stop loss, 100 pips TP, and my TP literally missed by like half a pip, but I secured half. I'm still in this trade. So the trade that I entered on gold, but my trade is at break even at this point. And I'm already up like 2% again for the day. And also I've been back testing. This is the trade that I'm in. And again, we don't trade the first 10 or so minutes after New York open. So this is the trade that I'm in. I secured half. So my trade is already at break even at this point. Yeah, so to me that's a no-brainer, because I've had this pattern play out almost each and every news cycle, because I know I've mentioned it also on the live session, where based on my markups, based on my charts, price was either in demand or supply zones, and after news happened, price literally rejected from there. So knowing that and having the confidence that this has happened in the past, to me, I just hopped into that trade, set a TP, set stop loss, and forgot about it. The next time I looked at it, actually the last time I looked at it, was price was a little bit in drawdown, but then I was still doing my markups. The next time I looked at it, price was all the way up here. So yeah, the key thing is to trust. And there's something Steven said this morning in the group, like, don't try to, if you have an analysis that works, this is why I tell you guys, if anything that I'm doing here is messing with you, just stop, like literally stop following me. Not in a bad way. I definitely want more and more people, but for me, when I first started this journey, I followed people that were, and I know I don't do it here, hopefully I don't, but they were making me over leverage. So if you feel like you're losing more than you're gaining in this group, to be honest with you, right? Like, look for something else that's going to better your trading. My goal here is for you guys not to make money, but to be better at trading. Money is just a byproduct. Yeah, but if you see my live sessions are confusing, then we have all these other strategies. We have indicators. So if for you, and here's another thing, right? Remember what I told you guys about static trend lines? Look at this rejection right here on the hourly. this rejection right here came down to a static trend line. This is a static trend line because it's based off of at least 2 high-low periods, and then you get that quick rejection. So right now, where is gold headed to? Gold is headed to at least this static trend line to the upside at, oh, I'm sorry, this is US 30, 33, 297, 298 area. And if you look at that, we have a supply zone up there. So yeah, this is what I mentioned about static trend lines will almost always get retested. I was actually looking for this trade, but again, I'm still starting the analysis. But yeah, this is the key. But going back to what I was saying, if my live sessions don't work for you, get these indicators. Yesterday these trades that I sent here, results here. Actually, I need to update this. So I entered. Let me send this to the group here. See. So this is currently where I'm at for the day on this account. So USDCHF, this was a breakout. GBP CAD breakout, BTC breakout. This gold is the one that I took earlier today. So what I'm doing, I just have the breakout indicator. I'm testing all time frames. I was actually about to take this CAD JPY. So right now, and I told you guys I'm testing this indicator so as to come up with values for you guys. But right now, all I'm doing for you guys who have access to my indicators, I'm using the 15-minute time frame. The 5-minute time frame, you can get a bunch of fake outs. So I'm just loading the indicator on a 15-minute time frame, and then I just look out for signals on the 15-minute. Now, how I'm dealing with it, so you can either do 2 ways, right? Same thing as our strategy for entering signals. So right now we know that odd JPY is breaking out for a buy. So you go to the odd JPY chart, and then you look at which candle is breaking out for the buy on odd JPY. So this is still calculation timed out. Just a second. And again, we're still waiting for the first 10 or so minutes, which have ended actually. So let me just give this one example before we start looking at trades. Okay, there it is. So odd JPY is breaking, and let me see when this loads. I think I turned off that. So odd JPY is breaking out for a buy. So one way you can look at it this way, use the 9 EMA, put the 9 EMA on your chart. And I think the 9 EMA is one of the indicators, one of the, what is it called? Yeah, it's this yellow one, but you can put yours so that it's more visual. So right now for this buy, you can either wait for the retest of the 9 EMA once you get a signal on whatever time frame you're using. But personally, all these trades that are here, USDCHF, GBP CAD, BTC, I entered them on impulse. So I just waited. I'm just leaving this indicator on the 15-minute time frame, and then just waiting for a signal. So I'm looking out for the signal every hour or so. And then once I get you can see all this, JPY, GJ, NZD, GJ, CHF, GJ, NAS is also breaking out for a buy on the 15 minutes. So I easily made 1% without even trying. So if my live session, I mean, not that I've gotten complaints, but I know some people might not be able to speak up, but it's because I've been where you guys are. If you find anything that I'm doing is not working for you, find the thing that works and ignore everything else. So let's see what we have today for US 30. We have these 2 static trend lines on the hourly. So you can see price just rejected from this static trend line that we had. That's actually a buy that I was looking forward to, but it's fine. We'll just wait on the next trade. So right now we have this static trend line to the downside, and then a static trend line to the upside that's here. So I don't like trend lines that are this way. So I like trend lines that are equidistant. So for US 30, we also have a daily bullish low here. We've traded this before. So if you look at these two trend lines, what do you expect? You normally expect price to squeeze. So if I draw this, you can see price has been trapped in between this zone to this zone, to this zone, to this zone, to this zone. So more than likely, you expect price to keep coming here and at some point either break to the downside or to the upside. So right now, we expect the trend line on the upside to be retested because this is a static trend line. And what we know about static trend lines is that they are almost always retested. So in any case, right now, I would be looking for a buy on US 30. So let me see what region we have for a buy. So we have the previous monthly low. This is also a static trend line. Give me 1 second. So let me see here, long position. 41 seconds. So if this candle closes, you can see we have a previous monthly low there. So if this candle closes, this will be a buy on, this should be a buy on US 30. Okay, this should be a buy on US 30. Give me 1 second. I want to see the stop loss and TP. Ideally, our TP would be the trend line, the static trend line that's up here. So this static trend line is about 33,317. So a 50 pip TP and stop loss would be ideal, but we need this candle to close above this trend line. So that's the trade right there. I will enter buy on US 30, 50 pips TP, 50 pips stop loss. Come on. The one time my charts keep freezing. I will enter this on my phone, and this is a 0.5% risk trade. So don't risk anything more than 0.5%. And if it does hit stop loss, let it just hit stop loss. And yeah, so this trade got faked out, already hit stop loss. So that's minus 0.5. I will still wait on this trade when price comes back here again, because I still expect the trend line on the upside to be retested. The only invalidation that can happen is if this hourly candle closes below this hourly, I'm sorry, this hourly candle closes below this hourly trend line right here. So if that happens, then I wouldn't look for anything. And that's the importance of letting, if a trade gets hit by stop loss, just let it get hit. No need to extend your stop loss. But this entry, I'm still looking for this entry to come back up as is. So my account just keeps freezing. That's fine. Okay, so that's minus 0.5 for the day. I know that trade went down pretty heavy. So keep in mind, almost every trade that I will always take in the beginning will always have a 0.5% risk. So if I'm late or if I forget to mention it, just know to use 0.5%. So this right here, this is just a loss for today for now. And then we move on, we keep looking at other entries. So gold, that's the trade I was in personally before news. Gold, what do we have? Gold, we only have this trend line to the upside. This is the trend line that was there yesterday. Which is that? This is the trend line that was there yesterday when we were trading. Gold right now, I really don't see anything. It's just squeezed in between. And if you look at where gold is around the psychological level of 2000. So you expect a bunch of squeezing or manipulation between these two levels. So right now, unless we get either a lower high or another high low, there's nothing to look at for gold. EU is still the same way. EU is consolidating. On the hourly, I tried to draw this trend line this morning, but I really, it's just too much. The only trend line, maybe this can be it right here. But yeah, nothing on EU, nothing on gold. So for US 30, again, I am still expecting US 30 to come back up. Now, if it does come back up, I will enter personally with a heavier lot size for you guys, but you can see it's rejecting off of this demand zone. So demand zones within demand zones. So I'm still expecting this move to happen. So we have 6 minutes before this hourly candle closes. Now with hourly candles, what we know about static trend lines, if this hourly candle closes below this trend line on the towards the downside. For any other hourly sell on US 30, we would need the next candle to retest and close below, so the next hourly candle. So, but because we are scalping at this point, we'll just scalp on the 5-minute time frame. But if you're looking for an overall sell on US 30 on the hourly time frame, if this candle closes, if this hourly candle that took us out at stop loss right here closes below this trend line, static trend line, you want the next hourly candle to then retest and close below. And at that point, which will be after the live session is done at around 11 a.m. Eastern Standard Time, if you have the next candle retesting and closing below, you can enter a sell there. But for right now, we need, even before entering any other trade, we need this candle to close in about five or so minutes. Let's see, if I take this off, we're probably also in a downtrend. Yeah, so we're in a downtrend, price is in a sell zone. So the buy that I'd marked up, I'm still waiting for that buy. So if I turn that on, turn that off, I'm still waiting for that buy around this zone. So 33,250. The only time I will change my bias would be maybe after the live session, after this hourly trend line closes, because I do see this as a fake out. That can just be faking out buyers like us before bringing price all the way back up. So I'll just be on the lookout for that trade. Right. What else do we have? We have Monday low. We have 4-hour bullish Monday low, weekly low. So this weekly low can move down here. 4-hour bullish low. So we have a demand zone within a demand zone here. So if price does come down here, it's actually good for price to come down here because I can see another entry. Because if this hourly candle closes below this static trend line, and we know that after a trend line is broken either to the upside or to the downside, you normally expect a retest. So if we're going to retest this trend line, they're probably going to pick up demand from either of this zone. So we have a 4-hour bullish low here. Currently, we have a Monday low here. So this would be a quick, let me see. We just need this hourly candle to close and then price to come down to one of these demand zones. But for this one, so I'll show you guys how we'll do this particular trade because it will be such a quick trade. So let me just go ahead and set up my trade copy here. Let's see. I'll go for, okay. All right, so we need this hourly candle to close in 3 minutes. So other than that, nothing else is really standing out for me. In those 3 minutes, let me see if, so this is what you want, right? So for example, odd JPY, you need a retest of the 9 EMA. So the 9 EMA is this yellow. So the 9 EMA on the 15-minute time frame, let me go to a much more clear chart. Okay, so this is what you want, 959. So this trade, so I will take, so personally, I'll take this buy for odd JPY. Again, it won't be, I'm just showing you how I'm taking this trades. It won't be a live trade that I'm calling. But for you guys who have access to my indicators, this is the same way I made this amount of money yesterday. Now, for me, I didn't wait for the retest of the 9 EMA, but remember, if you always wait for the retest of the 9 EMA, you will always have a better entry. But if you don't have time, then you can, so for example, if you entered this buy here, you can see your trade would have been in drawdown, and this trades I'm ideally going for. So yesterday I said instead of 550 pips TP, 50 pips stop loss, I'm going for 40 pips TP, 40 pips stop loss. So for this trade, let me go in here before that candle closes, odd JPY. Let's see, what account is that? So, and this is trading the breakout. This is not trading the reversal. It's ideally trading the breakout. So JPY, come in here. And I still have other trades that are running. Actually, they did. Yeah. Let's see. JPY. There it is. Delta market. So for these trades that I'm taking, since sometimes you can have a bunch of them, I am using like a 0.5% risk per trade, which is a bit high. But for me, that's what I'm doing. So let me see.
I'm going for the buy.
Yeah, I'm going for a buy on this. Again, this is not an official trade. I'm just showing, for those of you who have access to this indicator, I'm just showing you how I'm entering, or how, and this, the reason it's not an official trade is because I'm still testing the entries for this. And I'm considering these trades as swing trades. I know I'm a scalper, but yeah, so I just entered into the buy for that one. US 30, I know it's breaking out for a sell. However, my bias for US 30 is different from what that is telling me. BTC USD, I already made money on that. GJ. So also, right, you have all these GJ pairs or JPY pairs that are breaking out. So I'm now going to enter into 1, 2, 3, 4 JPY trades. And also you want to enter on the first candle, right? So we talked about this yesterday. Because something can be saying breakout, but it broke out like 30 minutes ago. So you want to make sure you're entering on the first candle. So which is why for this particular, and this was a news candle. So this is another reason to be wary of this breakout scanner. This candle that gave us the buy signal, I think it was it a news candle? In and around news. So because this was give me one sec. This is 15-minute. Not directly a news. I think the news candle was one of these two. So you want to be wary of the length of the candle. And also remember, the breakout happens. So for example, if this is the buy, if you turn on the test moving average plots, let me turn off all the other things and just leave. That's the 200 DMA. And also let me see if I can turn off the buy and sell signals. Turn that off. Okay. So this buy happened because price broke. This is this indicator is based off of the 50. Well, actually, it's based off of what EMA you put here. So the breakout EMA length. So it's advisable to leave this as 50 because you want a slow moving EMA. So it's breaking out. A breakout is detected 50 pips away from the whatever EMA you put. Or let me put it this way: the breakout, this shaded zones, that's what measures the breakout, either to the upside or to the downside. So a breakout to the upside is based on these pips you put in here that either are above or below the test EMA or the breakout EMA that you put in here. So for me here, this is 50, which is the default 50 EMA. And also the test pips that I have here is 50 pips above or 50 pips below. So you'll get a buy signal when price breaks above or below that zone. So ideally, another way to enter is instead of the 9 EMA waiting for the retest of the 9 EMA, is waiting for the retest of that breakout area that the signal was based off of. So for example, here, this is why I also entered that long position right here, because it retested the breakout area. So in this one, I said I go for double what I normally go for. So since I go for 40 pips TP, 20 pips TP, 20 pips stop loss for FX pairs. So for this one, you definitely, at the very least, want your stop loss below the other breakout area. So if we were to break out for a sell, the sell would show up if price broke out 50 pips below this moving average here. So if you want to reduce your risk or increase your risk, and use a lower TP and stop loss, you can use your stop loss below this zone right here, which is also below the 200 DMA. So those are some of the tests that I'm still running on this indicator to just find good entries for it. So this is, okay, there you go. We got this hourly candle right here. And I am expecting price to go back and retest this static trend line. So for that trade right here, so hopefully we get a bullish pin bar. All right. Bullish hammer candle. Ideal. So this is what you want to see. It's rejecting from, and we haven't traded a bullish hammer candle in a minute. So 74. So this would, if this closes as a bullish hammer candle, that would be a buy because the wick. So remember how we trade hammer candles? The wick has to be at least 30 pips. So this satisfies that. And also it lines up with our bias because we expect this trend line that has been broken to go ahead and get retested. But that will only be if this candle closes as a bullish candle, which ideally would be a bullish hammer candle. But until then, price can easily keep going down and then reject from some of this area. So keep in mind, we're in a demand zone. So price can keep going down, and then so this is something that if this keeps going down, you can expect this get into this. So this is the last demand zone for about 100 or so pips. So this is the last saving grace before you can get a retest here. So the entry here would be if in the next 7 seconds, if this closes as a bullish candle. If not, we have to keep waiting for price to reject from some of this demand zones. Yeah, so it didn't close as a bullish hammer candle. So that trade is invalidated. So we just have to keep waiting and hopefully we get a lower low established so as to enable us to draw a trend line. So let me just go ahead and give an update on this. Does anybody have any questions?
Yeah, just 2 questions. When you are trading, you said that sometimes you are looking for, like zone of liquidity, like where price could go. That is something I sometimes do also. And I was looking on the US30 trade, like on the charts, US30 chart on the 4 hours. And I was seeing like there are equal lows on the 4 hours, like at the what the price, like 33,100. Maybe I was thinking maybe price is could go there. What do you think about that?
33,100 right here, where you have these 2 lows right here, because this is the 4-hour time frame right here. Yeah, 33,100. So yeah, and there goes US30 went and retested, probably retested the hourly trend line. So that will be determined by this trend line, right? This trend line that we've been trading. So it definitely can come here, but the only way, if you want confirmation for that, you see what happened with the hourly. So this is what I meant to wait for, and unfortunately, right, we got faked out. It didn't give us a bullish hammer candle. We would have gotten a nice retracement. Now, for if you price can definitely go there, but remember, you always need something to validate your trade. So what did I say? So for you to get that sell to the bottom, this hourly candle, as we analyze, this hourly candle broke below. We expected this next hourly candle, which is what we are in, to retest this trend line. Now, if this hourly candle closes below this trend line, then you can enter into a sell to go to around 33,100 area. But if this candle now breaks above, it's already broken above this trend line and closes above, then you have to wait again for the next 2 or 3 candles, because the next candle after this one can also retest this trend line and close above, and US30 can keep moving up. So remember, the key here is to look at, where are my static trend lines? What do I know about static trend lines? I know that when a static trend line is established, price will almost always retest it. So whether this static trend line is retested right now, after price is breaking back within this zone, or later, because keep in mind, right, if you look at it, it's going all the way this way. So at some point, this trend line has to be retested by US 30. So what you'll use for that 33,100 area, to be honest with you, I would just use this hourly. As much as it's a weight, you'll avoid getting faked out. But for me, I still expect US 30 to go back up. The only time I'll change my bias on US 30 is if this candle, if this hourly candle that we are currently in closes below this trend line. So it already did its retest. And now if this hourly candle in the next 1 or so hours or 50 minutes closes below this trend line, I will change my bias for US 30 for a sell, and I'll be looking for sells on US 30. But until then, I just see this as a fake out. My bias is still bullish for US 30. That's just my own bias. Now, if that doesn't, again, you can just see, you can see that my trade easily got hit by stop loss. So I might be wrong, but based on my own probability and experience, I do see that we have a highly probable of going back up. Yeah, but that's how to use that entry. See what else do you have here. So yeah, right now US 30 is still bearish, and you can see, so this is still the area that I'm looking to re-enter US 30. And if US 30 is to retrace all the way up here, by that time US 30 will be above the 9 EMA, and will be above the 9 EMA and will have turned bullish. Now this, let's see, the wick of this candle is 205, 70. So yeah, I thought it would be a bearish hammer candle, but the body is too big. So yeah, I'll right now just wait for US 30 to do its thing. And any sell, I would need this hourly candle to close, because again, I don't want to sell in a demand zone, right? So if you know how I trade, I want as many confluences as possible. So I don't want to sell in a demand zone. And at the very least, if this trade is going down, then another thing I can look out for is a reversal, right? So if you're unsure how a trade or where a trade is headed to, remember, we have multiple strategies here. We have the breakout strategy, we have the reversal strategy. So for right now, I really don't see a trend on the, oh, this is a 15-minute. So there's a trend that's starting on US 30. This is 275. So a reversal would be around 750 area. So just come in here, do this 33 to 50 right there, and then do my area of interest. Yeah, I'm not sure we're going to get a what is it called? A trend on US 30, but if we do, then that's fine. In any case, then we would wait for a reversal. So right now, since I'm waiting for the hourly candle to close, there's no need, and I don't want to buy or to sell in a demand zone. At this point, I just say, okay, instead of feeling like I'm FOMOing, I'll just come in here, I have the reversal indicator, I'll draw my point of interest, and then I'll draw my 500 pips that I consider a trend. And then at that point, which is about 33, this is 280, 300. I think that's the zone. Yeah. So at around 33, 800 area, if this trend is maintained and price consistently stays below the 9 EMA on the 5-minute, I will just wait for a buy signal. So this one, I'll just turn on only buys. This one do close right here, 50. Give me a second. This one should be 1. So at that point, I just wait for this trade to come up, because I really don't want to be selling in demand. You can see all we have right here is demand zones for US 30. So I really don't want to be messing with any sells as of now until this hourly. Now, if we get a closure of this hourly candle, then yes, I would, that's the only time I'll change my bias for US 30. But for now, I'm not interested in any sells. See, for gold, we need this area to be established either as a lower high, and then we need one of these areas to be established like a lower high, and then this other one to be established like a lower low, and then we draw our trend lines. Other than that, even for gold, we are in demand zones. However, I did say we are around a psychological level of 2000. So normally expect a lot of, in any case, I wouldn't be looking to try and sell or to buy or sell gold in this zone, because you can buy gold thinking that, oh, it's around a support or demand zone, and then they drop it. And if they break 2000, they can take gold all the way to 1900 or 1950. So I wouldn't mess with gold at any time right now. Because I've seen that with gold before. You buy thinking that it's at 2000 area, they break that thing down for the next 3 weeks, or you sell at around this area thinking that they are going to break it down. And then remember, gold still hasn't touched 2070, and I expect gold to go all the way to 2070. So you can sell thinking that they'll break this thing down, and then they spike gold up to 2070. So yeah, I wouldn't even want to trade gold at this area. So EU is looking more promising. So EU has already completed this structure. But to be honest with you guys, today I don't see anything to look at. This is, I don't know why this ones have not populated. Yeah, this chart markups have not moved on. Huh. Okay. Yeah, so this is a time for questions. I don't know why these markups are not, I think I know why, but I don't know why they haven't moved over today. Daily bearish. Yeah. So you guys can ask questions that you have.
Yeah, I have a question. Do you think it's possible on the breakout scanner to have like a senior, like
Mm,
yeah, to have a senior when there is a breakout in the time frame defined?
I don't, let me see something. Any function, any alert. To be honest, I can ask my programmer, but I'm not sure. Maybe this is it. You can test this one out. Any function call, any alert. Let me just use that. Create. Let me create this and see whether it will do anything. You can test using that. We'll see whether it fires anything. But if not, I can ask my program if he can put that in. It's kind of tricky because it has like 50 or so instruments. So, but we'll see. I mean, nothing. He's pretty good, so there's nothing that I've given him that he can deliver. Yeah, but I'll look into that if you can get a signal from that particular time frame or whatever time frame it is you're trading. Anybody else have anything to ask? I'm just looking at why this markups on the 5 minute are not showing up on the 1 hour. I know it's this. No, not that. Mm-hmm.
Yeah, so no gold. You said it go to 27, but
Mm-hmm.
with what was it? Was it FOMC that took it to 2079? So it's already gone there.
Mm-hmm.
Yeah, so it's already gone to 2079. So will it? Do you think we can go back up?
You say it already went to
Yeah.
2070.
Yes, 79. 2079.
Are you sure? Because I'm seeing it's definitely gone to 2064 unless there's another time it's gone up there. No, the highest
Yeah.
gold has been is 2064. So the major
Mm,
the major order block on gold is on, I mean, depending on what chart you're looking at, but the major
yeah.
order this is what, yeah, the major order block on gold is 2070. So the
Yeah.
monthly, the weekly, all the main OBs for gold for sales are around 2070. So the highest it's gone is 2064.
Mm,
That EU on EU, it respected that demand zone pretty direct.
Yeah. Yeah, so here for EU, And looking around where you can see this is the weekly open. So when the week open, EU, yeah, I'm not really, also for EU, not really seeing too much. I hate days when I cannot see anything. Because EU, we are in demand zones, definitely. Demand zones, we have an hourly bearish high, hourly bearish low. On the hourly, we are also closing below this trend line, right? So you can see this static trend line to the downside. So we're possibly closing below. So yeah, so to me, this is a day for using the reversal strategy. Because you just have, or for me personally, I have just conflicting areas. So I
They
like
just finished
trading.
structure on the 5 minute on EU, so I don't know if that matters much on 5 minutes.
Oh yeah, yeah, it does, right? Because it completed structure and now it's breaking down. So this retracement might be just to retest this candle that broke structure and then keep pushing down. So yeah, to be honest with you, today would just be a day to use the reversal strategy. Unless you really want. So I'll tell you this, everything is bearish. Everything is bearish. Do I have anything to sell? Do I have any zones to sell? For me personally, based on my own strategies, I do not have any sell entries. I don't have a sell entry on gold. I don't have a sell entry on EU. The only sell entry on EU is down here, this hourly bearish high. I don't have a sell entry. Okay, now we do have a daily bearish low on US 30 that's being retested right now. So daily zones, of course, override. So for right now, right, daily, where price is at right now, this daily bearish low overrides everything. So overrides all these green areas. So US 30 right now definitely is a sell, and that is a sell zone. Now, would I be comfortable taking this sell? The reason I'll be comfortable taking a sell from this daily bearish low is because this daily zone overrides all these demand zones. So remember, these demand zones are from the monthly down to the 15-minute. I didn't see any demand zones in the monthly zone and in the weekly zones when I was doing this morning. So I'm pretty sure these demand zones here are the 15-minute, 30-minute, and 1 hour, 4 hour, maybe. So this daily bearish low overrides all these other zones. However, still, for me, I need a lot of confluences to align for me to enter even that sell. So I'm not going to do anything for US 30. Still, I am still waiting for a buy all the way up here. Where we got faked out, this right here is my ideal buy on US 30. As much as this daily bearish low overrides all this demand zones showing up here, I am still not comfortable taking it. So yeah, and just keep in mind, not every day will you get a trade, not every day will you get a winning trade. So it's just part of the journey. If we don't get any trades, we got a trade today, got stopped out. So in any case, right now, I would be looking not to take any more losses as opposed to just trying and fight or justifying a trade. So yeah, so I'll just leave it for more questions for you guys. And then you can answer any questions you have. I'll just
I'm gonna hit you after the Zoom. I got a suggestion for BTC.
okay, all right, perfect.
Yeah, bro.
Mhm.
Yeah, so when you said 2079 or 2078, that happened.
2070.
It happened. Yeah, 2078. That was on the FOMC, the first Thursday of May. He went there. You see it?
Give me 1 second. Let me see
Yeah.
that. Let me go to the daily. No, not on that.
Yeah.
You
Then
know
you
what?
said
Let me do this.
yeah. Yeah, I think you said it's gonna go to 2090. So you could go there.
So this is I know charts are different, but the charts, the currency.com chart, it's showing 2061 is the highest for gold so far. Other than last, which was it? Yeah, the all-time high has been 2077, which was in 2020, and then you had 2070, which was in 2022 in what is this? March. Yeah, so I'm expecting this level, right? You see this level all the way up here. So this FOMC, unless you're using a different chart, so the chart that I'm using, which is currency.com, gold has only gone all the way to 2064. It hasn't gone to 2070. So 2070 is my first sell on gold, if that makes
But
sense.
bro, you know, on that Thursday, the first Thursday of this month.
Wait, what chart? What chart? What chart are you looking at?
Yeah, basically, you know the MT4 chart, just the chart on MT4.
Well, leave the empty. I'm talking about on TradingView. So leave MT4. So on TradingView, if you have TradingView, what chart here on gold? You have currency.com, you have capital.com. So because for me, I don't use MT4. I don't use MT4 charts to tell me where price has been.
Oh yeah, you're right there. It's true, but yeah, on MT4 it shows 2078, but on
So
TradingView, yeah.
also, you need to remember MT4 uses brokers, right? So whatever broker you're using is different. So you can be using FTMO. So whatever broker gives, that's why if I was trading on MT4, the stop losses would be different from somebody doing FTMO, somebody doing MFF, because you have spread, you have lag, you have all of those things. So that's why I don't use MT4 to tell me where price has been or where price is going. So that's why I just use currency.com. And also just if we same thing, right? If you look up highest gold price this year, it might be a different one than it's in MT4.
Yeah. So
Yeah. So right now I
yeah.
use TradingView to analyze all my charts. I do not use anything. So
Yeah,
you can
so,
see
yeah.
record high was hit in 2020 at 2069. So yeah, I don't use MT4 to analyze charts.
So where do you expect it to go? Is it 2070? You said?
Well, well, here's the thing. I still expect gold to go to all the way to 2070. Does it have to happen? No, right? For me, saying that like same thing right here. I took a loss on US 30. So I expected it to go up, but it didn't. So as much as I might expect something to go up or down, the major factor will be, am I getting a trade? So you should ask yourself. So now here's another question. Why right, what are you trying to do with my expectation of where gold is going, right? Are you trying to swing trade? Now if you're trying to swing trade, maybe, right? But are you trying to scalp? So what's the logic behind wanting to know where gold is at? I think that's the first question to you.
So basically, I think it was at 2040. Was it 2040? What day was it? I think it was at 2040.
Yeah, around May 23rd-ish, May 23rd-ish. Yeah, May 23rd. Is it May 23rd? No, I'm sorry, March 23rd. I'm sorry.
Yeah. What was it?
Oh, 11th May. I'm sorry, 11th May.
Yeah. It was just there. I think it was just, what day is it today? Is it
16th.
Tuesday?
Yeah.
So I think just last week it was at 2040, and now it's come all the way down. So, I mean, based on that, it should go back up there, isn't it? Like, it should at least go. I mean, it's created another.
Why would it have to go back up there?
I mean, well, because it's isn't it the previous weekly high? So I mean, it should go around that.
Yeah, but so my question to you is why do you think it should go back there, right? Just by it being so like if we do even the weekly chart right here. So the thing with that logic is that it's a fallacy, right? So let's say here where you have right here, this was a previous weekly high. So this is the weekly chart. So this is a weekly high up here. So for somebody, this was a weekly high, which was ideally all-time high. Then if you're looking for something to go back to where it was last week, so let's say somebody tried to buy gold sometime here, depending on what their TP and stop loss would have been. So let's just assume they had 100 pips TP, 100 pips stop loss. So they keep expecting gold to, so this is the weekly time frame. So that's why this thing is a little bit more. So if you bought at the previous week, I know these things are messing up, so I'll just do this. So this was the previous weekly high. Let me use this. Use this. And then you buy here expecting gold, or you buy here expecting gold to go to the previous weekly high, which was the all-time high. Guess what? You keep getting faked out. Every week, you keep trying the previous weekly high. You would have ideally gotten stopped out this whole time. So it's never where any instrument is going. Just look for the liquidity zones, the buy and sell areas. That's it. Right? Because I used to be that way too, like US30, given that US30 is a directional asset and more times than not, it goes up. I never used to like being in sales for US30. So guess what? I was always literally buying US30. And then when the sell came, I would just get burnt, and then I would be afraid of getting into the sell because I have this notion that US30 always goes up. So it's not about, you can have a bias, like this can go that way, but then make sure that when your bias gets broken, change your bias. So same thing I said for US30. The only time I'll start, like right now I said I'm still bullish on US30, but the only time that I'll start looking for sales on US30 is if this hourly candle where we are at right now closes where it's at, closes below this trend line. But until then, I am still bullish on US30. So same thing as gold yesterday. So remember during our analysis, I said that this is a potential head and shoulder, right? So this one right here, inverse head and shoulder, I marked this up, and then I said this is the left shoulder, neckline, head right here. Then you go up the right shoulder, and then I expected gold to do this. Now, did it do that? No. But I had my trend line here. This is a static trend line. So this is why I'm saying observe what happens after a static trend line. So when this trend line got broken and then this other next candle closed below the trend line, at that point, my inverse head and shoulders is invalidated. So it would just be novel of me to keep expecting a pattern that's not there to keep getting created. So as much as you can have a, give me 1 second. Oh, that is loud. So try Desire, try using that. Right click on, God, how long is that alert? It's probably like 30 minutes. No, 30 seconds. Ugh. That is a way to, God, we have to deal with this for 30 seconds. Okay. Desire, try doing that. I'll deal with it later. But you saw what I did, right?
Can you show me again, please?
So do add alert and just make sure it's not 30 seconds because that was annoying. So you can do like 5 seconds. Do condition, do the GA Trading Club breakout scanner, and then just do any alert function call, and then that's it. And then just create. So condition should be the indicator. And then I didn't have time to look at it because it was just a lot of pinging going on. And then do any alert here, and then do create. Under notifications, you can do notify on the app. If you have the TradingView app on your phone, you should get notified. And then play sound. So this one you can do, if you really want that whole 30-second, you can do it. But that's, yeah. And then you'll get an alert. I think we found something, but I don't see any alerts here, right? Because I don't see any breakout. So I'll try and get him to maybe create an alert for that. Because it should give an alert if something is breaking out. But right now, I don't see any. I see a breakout on, what happened to, just a second, buy and sell signals. Where did they show up? Yeah, give me one second. Breakout scanner, because the table should have breakout buy or breakout sell. Yeah, so US30, I'm still waiting for US30 to come back up there for a buy. Okay, that's what I wanted. I just go, not interested in this.
So, bro, the other thing is, you know, let's just say the price rejects off the zone, yeah? And let's just say the lower low, you would always wait for a lower low and high low to be created, isn't it? But when you just took the US30 trade, and of course it hit the stop loss, which is fine, but you didn't wait for what would you call it? Is it a high low or a lower low to be created? You just like went in based off
Right. So what are our three confluences to enter a trade? Retest of a trend line, retest of a 9 EMA, or retest of a high low. So for me here, what I used was retest of this trend line, because this candle, this bearish candle right here retested this static trend line and closed above. So that was my confluence for entering that. We didn't have any, actually, in any case, a retest of a high-low period would have been up here, because this is the next high-low period, or this right here, this lower low is the next high-low period. So yeah, so that the confluence here was retest of this static trend line and closure above. That was the confluence for that trade.
Okay, so when you said always wait for that, if it's a buy, and wait for the lower low, high low to be created. Once it's created, you would wait for, you also look for the zone, isn't it? If it's a buy, if it's in a demand zone, you'd wait for
So
yeah.
This right here is an example of why I was saying wait for. The reason I like waiting for high-low areas to be created is so that I can draw my trend lines. That's just is as simple as that. So it's not for any other reason, because remember, my confluences are trend line, 9 EMA, or high-low period. So the reason I need high-low areas to be created is so that I can draw static trend lines. So static trend line is always connecting at least two high-low periods. So the reason, like for here, if I was looking for a buy right here on gold, if I had confluences for a buy, I would be buying gold at this point, because it's meeting my confluence of retest. So like if this candle were to close and I was looking for buys, I would buy gold at this point. Now, the only issue about trading trend lines that merge right here is that this is a squeezing pattern. So it's squeezing, and price can either break to the upside or break to the downside of these static trend lines. But if I just had, so normally we've had instances, this is why I say I like trading equidistant trend lines, which is to mean I like trading when we have a trend. So if this trend line, if for example, this one that we have here was lining up this way, right? If this, which is ideally similar to also US 30, but also I didn't like how the US 31 was. But for example, this gold, let's just assume we had another higher high here, and these were the trend lines. Now, these are patterns I love trading, because price is not squeezing anywhere. But so long as you have a trend line that's this way, or two trend lines that are this way, as much as you can have a confluence for a buy and enter a buy here, price is bound to squeeze and break past this trend line. So it's the same thing US 30 did on the hourly time frame, right? If you look on the hourly time frame, you have these two trend lines that are squeezing. So as much as price may break down, even though this hourly candle breaks down this way, eventually this trend line to the downside that we are trying to ride the buy on to go and retest that, it will have to be retested at some point. So even though it's not now, price can keep melting to the downside and then reverse at some point and then retest this trend line. So the reason I want high lows to be created is so that I can draw my trend lines. That's it.
Yeah, the other thing is, so the reversal, when you wait for the reversal, you'd always wait for that lower low to be created. Of course, you'd use the
no. Personally, no. So for all my strategies, for me, I just don't, again, I only trade one hour a day. I don't have time to wait for retest of 9 EMAs and all of that. But so for any of my strategies, and it's not meaning that you shouldn't do that. For any of my strategies, so let's say it's the reversal, or let's say it's the breakout. If you always wait for the retest of the 9 EMA, or high-low periods or trend lines, you will always get a better entry. Now, for me, the way I'm trading this, or the way I made this money right here, the 2% yesterday, or 1%, whatever it is, yesterday off of this breakouts, I wasn't waiting for a retest of anything. I was just saying, okay, Euro AUD is breaking out on the 15-minute. I come in here, I go Euro AUD. And I normally do this the first time that I'm testing things. So again, remember, I'm still testing for strategies for the breakout indicator. So for example, for me here, I don't have time to wait for the retest of the 9 EMA. So I would come in here, come into the Euro AUD chart on the 15-minute, and then come in here, turn on the test moving average plot so that I see that signal. So I know in the current 15-minute candle, there's a buy signal on Euro AUD. So we have 7 minutes for this candle to close. So in 7 minutes, I would then come back here and see if indeed this candle did close, and if it did close with a buy signal. Now, if that happened, or if that happens, then I would enter on impulse. Now, that's just my own strategy. That's not the holy grail. It's because I don't have to, it's a 15-minute candle. I don't have time to be coming every 15 seconds to check. So, but if you wait for the retest of the 9 EMA, like the same, you see the same thing we did with what was it, OJPY? If you entered on impulse, you'd be in drawdown. But if you waited for the retest of the 9 EMA, which is where the entry that I showed, I think right now the entry is around break even. So you'd have a much better entry. So the question is, how much time do you have to wait for the retest? But for all my strategies, if you always wait for a retest of the 9 EMA, for a retest of trend line, you will always have a better overall return over time. So you have a better return than me, because here I can take a loss on odd JPY because maybe I didn't wait for the retest of the 9 EMA and you did. On the other hand, in sometimes I'll make more or I have more winning trades because I entered on impulse and then price never gave you that retracement to the 9 EMA. Yeah. The other way you can do it, if you're trading the 15-minute time frame, you can wait for the retest of the 9 EMA on the 5-minute, right? So that's another way to do it. Yeah.
That's right. Yeah.
Yeah. So we have 20 minutes for this candle to close. Yeah, today, honestly, there's I don't see anything. I don't see anything worth the risk. EU's definitely trending down. Yeah. I just looking at the charts, I don't see anything here. Now here, there's a potential trade that may line up with the sell. So if we expect, if for sells on US 30, we are waiting for this candle, this hourly candle, to close in 20 minutes, which it might be likely that this candle will close in 20 minutes. We also have a daily bearish low here. What did price do when it broke below the daily bearish low? This heavy candle broke price below the daily bearish low, and then you had some manipulation to the upside again to retest the 9 EMA. Again, now we are having this break below the daily bearish low. So this might be an early filler entry for a sell. So this right here, I would consider this a filler entry for a sell, because the probability of this hourly candle closing as a bearish candle is a so filler entries, I recommend 0.125% risk. Again, do what and this one, it's 100 pips TP, 100 pips take profit, 100 pips TP, 100 pips stop loss. The reason for that, so this is an early entry because we are seeing that if for the bias for US 30s to change, we needed this hourly candle that's currently running to close, to retest the trend line, which it already did, this static trend line, and then close below, so which it's doing. So in the next 19 minutes or so, and this is why I said to use a filler trade, because this hourly candle can literally come back up and close as a bullish candle. So this trade is a filler trade, just to show you the confirmation where you would go in with a bigger lot size is if in the next 20 minutes we close, this hourly candle closes below this or where it's at, closes below the trend line. And at that point, you just look for areas around you to sell. And it looks like we only have the daily bearish low around this zone. So no need to over leverage on this trade. If you already took a loss, like 0.5% loss, which I said for the other trade, don't go in with a heavy lot size on this trade. So remember, you can easily get faked out here. This is just an early entry for this trade, and it's based off of this daily bearish low. The logic behind this is that we had this strong bearish candle that came down here, broke below the daily bearish low, and then you had this manipulation back to the upside that went all the way up, retested the 9 EMA and came back down. And where did it come back down to? It came back down to the daily bearish low. So this zone right here, where the daily bearish low is, which is around 33,113, this is where, this is a price point that they're, if this hourly candle closes below this trend line that it retested, this is where they'll pick up liquidity to push US30 to the downside. So this trade right here is not, you don't use a regular unless you know what you're doing or unless you can risk it. If you're going based off of the percentages that I give, only risk 0.125% for this trade. The bigger trade you'll enter is in 20 minutes if and when this candle, this hourly candle closes below the trend line. So hopefully that makes sense. If again you want to go for bigger lot sizes or bigger risk, that's on you. Just make sure you're not really over leveraging or not really going to lose a lot. Any questions? All right, perfect. See, these things are still sinking down.
Oh, bro,
Yeah.
you know, on Friday, what's it called? What's his name? That Powell guy is gonna speak. So that news, red folder news. Again, you wouldn't really care because it's not really like major like FOMC, NFP. You just let it do its thing. If it's in a again how it's if it's in that
Oh,
buy
no.
zone.
When Powell speaks, so if I'm already in a
Mm,
trade before news, I'm not going to close that trade because all my
mm,
trades nowadays I don't FOMO into trades. So if I'm in a trade before news, I'm not closing that trade. It's
yeah.
so
So
whether
even
it's
when yeah,
Powell, whether it's NFP, whether it's CPI, I'm not closing it.
but with CPI, NFP, FOMC, you know the pattern though, that pattern that you said. If it doesn't follow that pattern, let's just say, remember you said you can go up. The first 5 minute candle could go up, or it could go down because you could just do anything. It's not like like today the news how it just if you were in a buy for gold like you said, because there was a I think there was it a golden cross that was forming or something like that. I think it was a golden cross.
No. It was just a demand.
Oh no, it
Maybe
was
there
just
was a
in a yeah
golden cross.
yeah
It was just in a demand zone.
yeah. So if it's like yeah, so you'd let it just run. But when this guy speaks on Friday, let's just say, would it cause this? Would it be the same? You'd just keep it. If you're in a trade, you just let it do its thing,
Yeah,
right?
because again, the only thing that should ever the reason a lot of people panic is because they don't know why they entered the trade.
Mm,
That's it.
yeah.
But if you know, like for me, this gold trade, I wasn't even in the gold trade. I saw where gold was, and I saw Steven say there's news in 10 minutes. So I came back up here, I looked at where his price at. Okay. And then
Oh
I
yeah.
remembered every single time during news where price has respected my demand zones, I just hopped into
Mm,
a buy just like that on impulse because I knew I was using the problem. So I always ask myself, has this happened before? What happened when this happened before? Does it make sense? Yes. If it makes sense, just jump in.
So if there's news, you're in a buy. You're in a demand zone. You can see. Okay, this is another thing. Let's just say there's a
Mhm,
death cross. You're in a
mhm.
demand zone. You're in a demand zone and you're in a buy, but there's a death cross forming. What would you do then? Like, would you still let it do its thing? Or
So why did I enter the trade? So if I entered the trade and I saw the death cross, that means there was something to invalidate the death cross for me.
all right, let's see. How would that make sense? Yeah, all right. So let's see. Yeah. So if there's a death cross, well, okay. How would it invalidate the trade? What would invalidate it, for example?
Um,
Yeah.
what would invalidate a trade?
Mm. No. Yeah. What would invalidate that type of trade? Let's just say there's news that you're in a demand zone, you buy, but you
Mhm.
see, I think you don't buy, you think about it because you see a death cross, but you're in a buy zone. What would invalidate? What would you say? Would it be what's around that?
Yeah, what's around that? Because I trade on the 5 minute time frame. If I'm
Yeah.
around 4 hour bullish lows, why would I let a 5 minute death cross ruin my trade? So for me,
Mm,
high time frame zones always override low time frame zones.
yeah, that's
High
true.
time frame. So same thing here. This daily bearish low overrides every green thing that I'm seeing. So for me, remember, I don't buy or sell based off of green thing or green or sell red areas. In any case, I don't need them. I just use them to tell me There are a bunch of buyers here, there are a bunch of sellers here. But if we had like a monthly bearish low here, it would override everything, because I know what markups do. I start from the monthly down to the 15-minute time frame. So for me, monthly will always take precedence over everything. Next to that is weekly. Next to that is daily.
So you're seeing that on the what's it called, on trading, isn't it? You don't look at the MT4 chart.
No, I don't look at
right?
the MT4 chart. No.
Oh, I wonder why. Yeah. So So what's it called? Yeah. So on the hour, is it the hourly or the 4 hour? You said. Of course, you said the higher time frame always is always what's it again? You said
always overrides. And also, I don't look when I'm trading. I have the 5-minute on my left, the hourly on the right. Right. So I don't look at the 4 hour. The only time I'm on the 4 hour on the weekly chart is when I'm doing my daily markups, because when I'm doing my daily markups, I come in here, start on the monthly, do my markups, come in here, start on the weekly. So I don't know what's going on the 4 hour because I'm not interested in it. I don't know what's going on the weekly. I already got what I needed from the weekly charts. I already got my order blocks from those zones. So I literally do not care. That's just my own strategy. There are people who look at 4 hour, but the way that I'm trading, I'm not interested in what's going on the 4 hour time frame. The only thing I'm interested in is my bias. That is it. I look at the hourly to tell me where is price, like, do we have a trend line? Do we have static trend lines? Do we have any patterns that we can trade? That is it.
All right. Yeah, I see. Yeah, that's another thing. What's it called? So, bro, when you said the news, or just in general, when you said the first 5 minutes, on the what's it called? Yeah. Sometimes you can see, for example, that price will be in that buy zone, but just literally right above it, there could be a supply zone. What would you do in that case?
So same thing I said, what is the trade valid or not, right? So for me, remember, I enter into trades here. I see a valid trade, I take it. I don't care about anything else. That's it, right? If you have to question whether a trade is valid or not, then you need to keep studying, right? And the easiest way to study, how do I enter a trade? Okay, I look for a trade. Where is price at right now, and what is price around? That's number one. That tells me, is a trade valid or not? Okay, number two, if I'm supposed to enter a trade, I need to draw my trend line. I need to wait for a retest of the 9 EMA, or I need to wait for a retest of the high low. So everything, the defining thing for any trade that you ever enter is the trade valid or not. Like, if you hopped into that trade, are you comfortable closing your computer and going to the store? If you're not, then do not enter that trade. So leave alone buyers or supply on demand areas. Those are, look at this, US 30 broke all these demand areas. So if I was just FOMOing, I would have said, okay, guys, we got stopped out here. Let's buy US 30 here. We buy US 30 here, get stopped out. Say, okay, guys, we're still in a demand zone. Let's buy again. Stopped out, stopped out, stopped out. So make sure the trade is valid. That's it. If the trade doesn't play out, step back, reanalyze, and you'll be fine. Because here, if we are going off of the mentality that US 30 as being in a demand zone, we would have gotten stopped out multiple times. Yeah.
Yeah, that's true.
Yeah. So always use, again, don't use this buy or sell areas or supply and demand areas to show you where to buy or where to sell. No, think of them. And this is the same way, right? How I'm able to deal with my charts when I have the trend lines. In any case, let me delete this, because even for me, I don't like a lot of markups on my charts, but how I've learned to adapt to them, when I'm looking at my chart, I might as well be trading a naked chart, because I'm not even noticing these zones. When I see the green zone, it just tells me, hey, there's buyers sitting here. Okay, what do I know about buyers? It means that there's a demand zone there. Okay, if there's a demand zone, look at the zones that are around the demand zone. Then I come in here, I see we have the Monday low, the weekly low now is down here. Then we have a 4-hour bullish low. We have a daily bearish low. So, okay, what does that tell you? It tells me that the daily bearish low rarely comes up and it overrides all the other buy zones. Okay, step one. So you have so you have two conflicting trades or two conflicting biases, but then, right, the daily one here is telling you overall it's a sell. Okay, then you need more confluences. We still don't have a trend line here on the 5-minute. I go on the hourly. What am I seeing on the hourly? On the hourly, I see US 30 broke an established trend line. Remember, you're always looking for confluences. US 30 broke an established trend line. Okay, what do I know about an established or static trend line? You normally expect a retest of that trend line. Okay, this next hourly candle which we're in, it retested that trend line, and it looks like in the 7 minutes it might close below. Okay, so what does that tell you? That tells you that more than likely price will then go for a sell from here, or price will sell here, because after a structure is broken, you normally expect a retest, and then if it's to go in that direction, continuation. So for me, this sell that I entered here, it's since I didn't get enough biases for a sell on the 5-minute, I only got the daily bearish low, and I'm also in these demand zones. In order not to be trapped in two trades, I go on the hourly, and then I see, wait, the hourly is telling me that this is a potential, which is why I said let's use a filler trade here in order to see how this is going. So always look for confluences. If you're still having trouble with it, write them down. Step 1, look for is that trade valid or not? Check. Okay, step 2, what areas are around the valid trade? Check. Okay, on higher time frames, does this support your bias? Check. If all those things align, go ahead and enter the trade.
Yeah, that's right.
Yeah. All right, so 53, so we have like seven more minutes. Now, if this, well, I guess I can stay on for 7 more minutes. If this hourly candle closes below this zone, below the daily bearish low, I expect a spike to the downside to continue US 30 down, and I'll be looking to scale in with a bigger lot size. So if we get a nice volume candle that closes below the daily bearish low, on the closure of this hourly candle, I will enter with a bigger lot size, probably with a smaller TP and stop loss. But we need this hourly candle to close, because still this hourly candle in the next 5 minutes, it can literally spike up and close as a bullish candle. So it's just a matter of patience. So odd JPY is still the only thing with pairs like odd JPY, they literally just move so slowly. Desire, I don't know if you saw the alerts that came in. I know we had some alerts for that one we just said. I don't know what it said. It said Euro AUD buy or sell, NZD USD buy or sell. Yeah, it looks like it's working. And I see here we have 2 NZD USD entries, so I might just, in any case, you can delete that in the scanner itself. No, can you? Probably not. I'll ask him to delete it. Yeah, I don't know how frequently it scans it, but you can see that it gave us what we are looking for. So hopefully that's what you're looking for, the buy or sell alerts.
Yeah, thank you.
Yeah. And then, yeah, just if you want a better return, just wait on the retest of that breakout zone. Or if you don't have time, just enter on impulse more times than not. And this is why it's better to do these breakouts on the 15-minute, because on the 5-minute, you're likely to get faked in and out. So even better if you can find a breakout on the hourly, but definitely if you go on the hourly, or the 30-minute, definitely wait for a retest of the 9 EMA or retest of that breakout structure. Yeah, so this is I'm going to test this in the next week or so and just have some parameters for it, right? So this is right, same thing I told you. This candle can literally close above this trend line. So in 3 minutes, we need to see what happens here. So this trade again, 0.125% risk. No need to risk anything more than that, because this is a filler trade. It's just to show us what direction or what would happen right here. So just observe, look at what they're doing, right? Importance of static trend line. So they're going back to try and retest this static trend line. So in three minutes, you'll see if we get a bullish candle, then the trade is invalidated, and at that point I would say just call it a day until price breaks consistently above or below this static trend line on US30. Because if you can look at gold, was it yesterday? Yeah, so yesterday this high low had not been created. So yesterday we were only trading this. This is what we are trading yesterday. So you had this one closing above, the next one closing below, then the next one closing above. So here you just had a lot of people getting faked out, and possibly people who were just FOMOing and trying to get into buys for possibly the and oh, actually yesterday's trade, it came back into profit. So I sent this in the group yesterday, came back into profit. Went like 35 pips in profit, and you would have set break even. So I got out of this trade at break even. For this trade, you'd have made just like what, 0.1%, I believe, 0.125%. So you can see this trade almost got stopped out. Price went all the way back, like 80% in profit, came back and would have hit break even. So this is the reason I'm saying if you get they can do the same thing as they did with gold yesterday. So this was a trend line with gold, faked out both buyers and sellers before actually starting the actual move. So remember, there's always going to be a trade. If you get faked out, the most important thing is to conserve your capital, because like what I'm talking about, the trend, so this is still valid. So this trend is still valid. We've only had like at most one candle closures above the 9 EMA. So this here is still valid. So just save your, if you can't see any trades, do not force anything. Save your margin for when you get the move that's confirmed. So this right here is a 65 to 36. So it doesn't qualify as an inverted bullish hammer candle, but it is a pretty good, I'm sorry, bearish hammer candle, but it is a good bearish candle. What I'm looking for here, I'm looking for a closure below the daily bearish low for me to size in with a bigger position. So we have like 30 seconds. Yeah, we normally end the live session at 11. I know the past few days I've been staying around till 15 minutes after, but you know, I just want to be consistent. So yeah, for this trade, I would say if you want to scale in, wait for break and closure below the daily bearish low, and then retest and closure below for you to enter any sells. Because if that happens, if you think about it, if that is to happen, if a candle is to break the, I don't like how frequent that alert comes. If this is to happen, a closure and a closure below the daily bearish low, and then you have a retest of the daily bearish low and closure below, it will take out the Friday low, will take out the previous weekly low, and then pick up sell liquidity from this daily bearish low to keep pushing down. So this would be the area to continue your sell for US 30, and at that point you can even use a 50 pip TP 50 pip stop loss, and possibly so for this one I would say 0.5% risk and hopefully just end the day at break even. So this is the trade that I'll be looking to take. Not sure when it's going to come up, because price can just consolidate here for now. Worst case, you can set a pending order if you're up to it. Yeah, but this would be the trade. You're looking for a candle to close below the daily bearish low. You're waiting for the next 5-minute candle to retest the daily bearish low and close below. And then at that point, you enter the sell. So not sure if we're going to get that, but see. Yeah. Does anybody else have any questions?
Yeah, but one more thing.
Mhm.
Okay, cool. Last thing is, yeah. So no, on Thursday, last Thursday
Mhm.
that just went, the Thursday that just went. You know
Mhm.
the unemployment claims that you remember how you were saying always to, of course, the news. You should learn how to trade it, but the unemployment claims that I think it went up for 60 pips on gold. I'm saying on
Mhm.
gold it went up for like 60 pips, and then it closed as a, what do you call it? Like you said, the inverted bullish hammer candle.
Mhm.
Yeah. So if it closes as a inverted bullish hammer candle, does that usually mean it could be, there will be the next candle, the next 5-minute candle would be maybe a bullish. I think it was was it a bullish engulfing or something like that? It was definitely a bullish candle, but then from there, it just reversed from 2040 all the way down.
So I
So,
don't trade.
yeah.
I don't trade my new strategy. I don't trade unemployment claims. It's only strictly for FOMC minutes release that has the conference. Strictly for NFP and for CPI. It doesn't work well with CPI, but mostly I only look to trade my new strategies, NFP or FOMC release. That's it. I don't trade my new strategy on unemployment. That, unemployment, that just takes price to where it's supposed to be. You rarely have, if you're in a trade, you won't have a lot of, in short, you won't have a lot of volatility for unemployment claims, because normally if you look at unemployment claims, there's like 2 folders, or most times there's like 3 folders that are being released. So you normally have unemployment claims, you have Philly Fed manufacturing, and you have existing home sales. So what happens during on Thursday, sometimes one is negative, the other one is positive. So you just have a bunch of fake outs. So with my new strategy, you do not want to have fake outs. You just want a clean break and continuation. That's it.
That's it. Good.
Yeah.
That's true. Yeah. I think that was the fake out. You were right. Yeah, you're right.
Yeah. I don't trade. I don't trade my new strategy with unemployment claims. Yeah.
Yeah. You're right. It went for, I think, 60 pips and then just reversed all the way. I don't know how it done that, but yeah. Yeah, man.
Yeah, for trading news, you want just one news folder. You don't want to have at 8:30 like 4 news folders that can affect price, because that is literally just faking out. So that's why NFP is good, CPI is good, FOMC is good as well, because it's only one folder and one folder around that time.
Yeah, but the other thing is this, FOMC especially, when I looked at it, that day when it got released, so I think it was 2:30 or 7:30 because different time zones. The move, I don't know why the move happened in the night instead, like around like 10 or 11 in the night. I mean, for you, maybe it's been different.
Because FOMC, you need to consider, and the FOMC I trade is the one that has a conference. So for me, it's like 2 p.m. Eastern Standard Time. So, but the actual move comes 30 minutes later, the one that has a conference, because the one that has a conference, you find Jerome Powell, who's the chair of the Fed. He's now talking about the decision that was released at 2 p.m. So after that, what do you normally expect? A lot of manipulation too around that time, and then the actual move comes overnight. So whatever direction price is going to take at 2:30 will more than likely continue into New York at the same the rest of the night, which is why, based on my new strategy, always looks to follow the trend. That's it. It only tries to catch a quick reversal on the first 5-minute after the first 5-minute news candle. But the third trade that we take is ideally just going along with the trend that was created by the first 5-minute candle. Because I've got burnt, I've blown a lot of accounts trying to catch a reversal on news. But then after blowing all those accounts, I came up with my reversal strategy. I say, in any case, if I don't get any entry, or if I get taken out trying to trade news, I'll just wait for the reversal the next morning. And yeah, I just have more wins if I do that.
This is that's right. And then also, this reversal, that's the other thing. Of course, I mean, depends. But when you said the point of interest, knowing how you do it, how you mark it up, however you do it, this point of interest that you do, you look for, how many pips was it again? Was it 150 to? I mean, you could go
150 for gold. That's just for me. I just for you it can be 50. For me, I consider a trend on gold to be 150 pips.
So what's this called? So this point of interest that you say, I mean, of course, most likely it could go down there, it might not, but if it does go down there, that basically means more or less likely, of course, you would look for a reversal from there, isn't it? And what's it called? So what's it called? With US 30, so right now you look for what would you look for now for a reversal?
Yeah, and this is not going to happen for US 30, but reversal, it's the same thing I always look for. Point of interest, 500 pips. To me, 500 pips is a trend for US 30, and that's it. Is as simple as this. simple as these two things that I've drawn. So long as this doesn't end, it, hopefully it happens because I'm looking for sells and I'm in a sell for US 30. But do I think it's going to go all the way down this way for 500 pips without heavy news? Probably not. So reversals, you will, and this is why you need this indicator, because for me, reversals, I can only identify reversals manually on US 30, gold, and EU because I trade them every day. But you're not going to get reversals every day.
Yeah.
Right, on these three instruments. Now, before news and after news, yeah, you're more than likely to get it. But we have like 50 instruments that are available to trade. So I'm pretty sure there's a reversal on any of these instruments right here. So that's why I need this scanner to tell me that, hey, GBP CAD is trending down. I go to GBP CAD and then possibly see. And you on the live session, you probably heard, like, I know Desire is the one who calls them out. It's like, oh, there's a reversal on, like yesterday, a lot of people called that reversal on GU. I never knew there was a reversal because I don't trade GU, but maybe they had the reversal, the breakout scanner, and then they were able to tell that GU has been trending to the upside. So yeah, so personally, I can only see US 30, gold, and EU because I trade them daily. But yeah, we have all these instruments that you can catch the reversal easily.
With this, the scanner, when it shows you the breakout, when it says breakout, and then what's the other thing? Reversal. So reversal and
no, it
breakout.
doesn't show you reversal. It just shows you breakout.
Yeah, breakout. So once it says that, what would you look for then? Of course, you'd look for what's it called?
Yeah, but I already went over that, right? So if it shows me a breakout, for me, I just sent on impulse. That's it. I don't wait for it. I don't have time to wait for the retest of the night. Yeah.
All right. Thanks.
And for any of my strategies, if you're in doubt of what to look out for, remember, always look out for retest of 9. It's as simple as that. Don't even worry about the trend line. If you're ever in doubt with any of my strategies and you get a signal, just be on the lookout for the retest of 9 EMA. That's it. That's the simplest.
Yeah. All right. Thank you.
Yeah. All right. Any last questions? Personally, I'm in a buy for you. I'm sorry, buy. I'm in a sell for US 30, still this original sell. I'll be looking to scale in here if we get this pattern. Closure below the daily bearish low, retest, and closure below the daily bearish low. I'll look to enter with a 0.5% risk. So that's the one I've given to you guys. 50 pips TP, 50 pips stop loss should be good. Yeah, and that should be it. Any last questions? If not, hopefully we end the day at break even. If this trade validates and hits TP, we'll just end the day at break even, so which is better than nothing. So this is the importance. I always tell you guys, always, I cannot insist that enough. Always have a set TP, always have a set stop loss, because if you did not set a stop loss on this trade, I know, when I was trading demo accounts, because I really didn't care about money or the demo money, at some point you'd be on a 200K, you'd be down like 80,000, right? Because you never set a stop loss. But make sure in every trade, and that's why sometimes I miss this trade. Sometimes I miss the trades that I call on the live because I'm still setting my TP and stop loss. But I don't feel bad because I missed even a trade that went into TP, because I know that, hey, if I hopped into this trade and did not set a stop loss, this trade did not even come back close to break even. So right now you just be wondering, and right now we are about to take a sell. We're in a sell and price is still pushing to the downside. So every trade that you, especially if you're a beginner, make sure, I wish somebody told me that or made me learn that when I was first starting, always have a set TP and stop loss. Keep in mind, you'll never win every trade that you'll take, and you'll never lose every trade that you take. So the key here is to find a strategy that works, stick to it, know the risk for each and every trade, know your TP and stop loss for each and every trade, and then find a strategy that's has a 70% win rate, whatever, a positive win rate, and then you'll be fine. Don't worry whether price goes up or down. That's what price is meant to do. But other than that, I will see. I think there's Tommy, you have a question about EU?
Yeah, I just had a question about the breakout scanner. The last on the 15-minute time frame here, I took a sell And I just wanted to ask you and just make sure, see if I kind of did it right. So if you could see where the sell candle is printed.
What instrument was that?
On EU, sorry.
Oh, EU. Oh, I'm sorry. Euro
On
USD.
EU. Euro USD. Sorry, my bad.
Okay.
Euro USD.
Uh-huh.
And so the breakout scanner, like I had a sell, it printed a sell,
This one.
and because I saw that it said breakout on the chart under 15-minute, and then
Mhm.
that you see that big bullish green candle that comes up after the sell, and then
Yeah.
I turned on the 9 EMA, and it kind of closed a tiny bit above it, but then it's in profit now, and so I'm just wondering, like, is this kind of what you're saying as far as like letting it retest the
Yes.
9 EMA and then just kind of setting your stop loss, your take profit, and letting it ride?
Yes. Yes. Correct.
Okay. Okay. Cool. That's
Yeah.
all I was wondering.
Yeah. So this way, same thing with the signals is the same thing. If you always wait for the retest of the 9 EMA, you will have a much better entry, because you're right. Because if it was me, honestly, because I'm not waiting for because I'm testing this out. But if it was me here, I would just have, so long as my stop loss is above the previous area where it could have broken to the upside, like so long as my stop loss is above here, for me, I would, I'm just entering these trades on impulse. Yeah, but for you, you can see you would have had a much better entry than me, and you would be heavily in profit, or whilst I'm still out here at break even. Yeah, but you're right. That is exactly, if you have the time to do so, wait for that retest of that 9 EMA, and you will almost always have a higher win rate than people like me who hop in on the candle.
Okay. And then the under, like when you first apply the indicator, gives you two values to enter.
Yes.
Is
So correct.
that 50 and 50?
Yes, so 50 and 50 right here. So breakout EMA length, the default the default is 00. So you want the breakout EMA length to be a slow moving EMA. So based on the testing that myself and my program have done, we found that 50 is good, because ideally you want a lagging EMA, because what a lagging EMA does, price rarely retest a lagging EMA, right? You know what I mean? So for
Okay.
example, it would rarely retest a 50 EMA compared to the 9 EMA, because the 9 EMA is much closer to the price than the 50 EMA and 200. So here you want a slow moving EMA. 50 should be a good start. And then the test amount of pips, this is just the distance above or below your breakout EMA length. So this is what's shaded. You can see the dark shading right here. I think the background color or whatnot. And then
Okay.
if you want to, what was the other thing? This
So that's
signal.
for Forex pairs is 50 and 50, or
Yes. Yeah.
is it
So for
across the
Forex,
board?
yeah. But for here, so to be honest with you, I haven't tested US 30, but gold should be similar to FX pairs in this instance. But so I would say test US 30. So for example, let's just see if we can come up with what to do for US 30. So US 30 is here. And because most of the instruments here are Forex pairs, right? Ideally, I wanted whatever value you put in here to apply to everything, because 90% of things here in here are Forex pairs. So it would be difficult for you to keep changing one after the other. So this is US 30. Let's change US 30 here to 100. And if we change this, we'll see that the FX, I'm sorry, just 1 second. Still loading. Okay, the buy or sell signals might move away depending on how close or how far they are. Yeah, so US 30, I'm still testing this, but I would say US 30 definitely, because US 30, I do double what I do on FX pairs. Try 100 pips right here.
And that's
Try
for
100.
the pip is for the breakout amount or the strength of the breakout, or
Yes. So if you do 100
okay.
here, it will mean that price is 100 pips away from the 50 EMA in either direction.
Okay.
Yeah. Yep. You're
Okay.
right.
And then my one last question is, when you use this, or I know you said that you're not using this as much right now, you haven't had time to test it, but like even all of the, like, let's say even just for example the reversal indicator, or this, like, because I went through the indicators, and some people with their indicators, they have like alerts set on them where you can set an alert. So how do you do you just do your market analyzation, look at your market structure, return a structure, and then kind of get an idea of where you want them to come and set an alert? Or do you just randomly go on here a couple times a day and just check and see what the scanner says and look for your entries that way? Or I guess what I'm trying, do you get why I'm asking that? Because I'm just wondering, like, obviously none of us can really sit here 247, right?
Yeah.
So what would you recommend or suggest would be like the best approach to like just go on here and find your trades or keep track of them?
Yeah. So good question. So definitely, for me, I've found the time that works for trading for me is New York Open to 1.5 hours. So which is why we do the live session 9:30 to 11. So that's the only time that I look for live trades. I look for breakouts and I look for a reversal. Now, let's say during the live session, and mostly you'll notice this when we are doing a live session during news, we see a strong break, or on a Friday, we see a strong breakout. So I'm only going to do the reversal if I do if we're trading US 30 here and it's only going down and going down. So I'll come in here still during this 1.5 hour period, draw my point of interest, draw the 500 pips. Now, in this instance, you can set an alert so that if price gets somewhere below 32,811, you get an alert. You know what I mean? So you can set an alert before, and then you come in here, you're only interested in buys, you turn on the buy, and then you just wait for that buy signal, and that's it, you enter. Now, I've found that some of these reversals you'll find them post New York, so between 2 to 4 p.m. Eastern Standard Time. Now, for reversals and breakouts, you'll find them 2 p.m. Eastern Standard Time to about 9 p.m. Eastern Standard Time. So that's 7-hour window, which is ideally end of New York and mid-Asia. Now, during that time, you have a lot of consolidation and possibly fake outs, because if you look at the signals that come up, even in our signals channel, the signals that you get between those hours, you can get a 15-minute buy on something, and then 30 minutes later, you get a 15-minute sell. So you want to avoid taking signals during that 7-hour period. I'll even call it 3 p.m. Eastern Standard Time to 9 p.m. Eastern Standard Time, or 8 p.m. Eastern Standard Time, plus or minus 1 hour. So once you do these markups, take them when they show up 9:30 p.m. Eastern Standard Time to 11 a.m. Eastern Standard Time. So that's the sweet spot of trading breakouts and trading reversals. 9:30 p.m. Eastern Standard Time to 11 a.m. Eastern Standard Time. So hopefully that helps.
Okay, yeah, that's gold. I appreciate that.
Yeah, so you want to be cautious. Now, for the reversals, for me, because I've noticed the reversals have a high win rate, for me, what I do, if I get a reversal entry, like how I got on AUD USD last Friday, and it was around the weekly close, it was around the last half of, or the last 3 hours of New York session. If I was entering, in short, I just use 50% of the lot size I would use, because I know that I'm bound to get faked out, but price can literally just even reverse from that point. But just, it's not FOMOing. The trade was valid, but because it came out at around where you can have a lot of manipulation, just if you get a trade between 3 p.m. Eastern Standard Time to 8 p.m. Eastern Standard Time, use half the lot size you would normally use, and then leave the rest as leverage. So long as everything has aligned for you, just use half, so that worst case, you end up making 0.25% instead of 0.5, or worst case, you end up trade comes and hits your stop loss, you only end up losing 0.25% instead of 0.5. Or the other best case, trade comes into drawdown, gives you another entry, and then guess what? You enter with the other half, and then you have a better entry. Okay. So hopefully that makes sense. Yeah.
So that's between 3 and 9, basically. Just go half.
Yeah, 3 and 9. Yeah.
Okay. If you do see something, and I guess that kind of makes sense what you're saying too, because I've always noticed, like, the later on the next session that opens, a lot of times it will kind of correct like what happened the previous session. But I guess that's kind of what's cool with the indicator, because it kind of gives you an entry. So okay, cool. I appreciate it. That's all my questions. Thank you.
All right, perfect. Anybody else?
Yeah, I got a real quick question for your EMA. Would you recommend adding the 9 EMA on NT4 direct as well?
Yeah, so I do have it on my phone. I don't trade on my phone, but yeah, I do have the 9 EMA on my phone, which is how I was able to see the reversal on Friday. As much as I wasn't in front of the charts, I just looked at it. Yeah, I never used to have it, but for me, I do have both the 9 EMA and 200 EMA on my phone. So it does help with analysis when you're not in front of the charts.
Now the 200 EMA, what's the purpose of that one?
Ideally, the golden the purpose of the 200 EMA is the golden cross and death cross, right?
Okay.
And also to show you where you can exit a position. So let's say you entered a buy. Okay, let's just assume right now this sell on gold comes in, and then let's just assume the 200 EMA on the hourly is not up here. Let's just assume it's somewhere down here where price is rejecting from. So the 200 EMA can also show you on a higher time frame where your TP should be, right? So ideally, if you're taking a trade on the 5-minute, you want your TP to be somewhere. If it's a anyway, you don't want your TP to be past at 200 DMA on like the hourly, if that makes sense.
Okay.
Yeah, so the 200 DMA will help you with death crosses and golden crosses, and also show you a region where you might want to adjust your TP or stop loss for.
Okay. So we can put the 200 and the 9 on MT4. Gotcha. Okay.
Yeah. Any other questions? All right, perfect. So yeah, right now this trade, you can see it's being held because we're in a demand zone. If we do get this break below US 30, will melt. Now they might decide to hold this, bring US 30 back up to grab more liquidity, and the only place they could grab liquidity is around 33 to 80. Because to break a daily bearish low, you need a lot of selling pressure. So if it doesn't happen, right, you can see they're literally trying to break that. If it doesn't happen, they're going to go back up and try and find sell pressure somewhere else, which is probably around 33, 300. Yeah, but I'm still going to hold this. I'm going to look out for this next trade where I'll enter with a heavier lot size and then just look to be at break even for the day. Other than that, unless anybody else has anything to ask, I will see you guys tomorrow.